Does the Turkey Day rally have legs? New closing high for the move yesterday by a nice margin. We're trading up nicely this morning. This is going to be an all positivity show today. With Deere earnings, we're going to talk about a whole group of stocks that are actually up on the year. Good segment coming up at 8:35, folks. You don't want to miss that. The tech stock strategist, Sean Udall, will be on, and I have some tricks planned for him and Dennis. So here we are on this Wednesday. Mitch, let's get things started.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders and investors. Let's get things started. Up 6 handles at 16 and a quarter. Posted a new closing high for the move yesterday. A little bit of consolidation, continuation of the move higher. We have the buck lower by 20 cents at 106.91. TLT back over 100, holding steady. Big reversal in crude down 210, 78.85, hanging out in the 70 handle. Gold down 340, continues that quiet sell-off after getting near 1800. That's 1736.40. Silver in the green by a dime, going the opposite way, 21.15. Bitcoin quiet, hanging out just above 16K at 16,065. And Ethereum, that's up 550 at 1129. Triple D, you do not have the day off tomorrow. You will be doing a pre-market prep show by yourself, and I'm giving Money Mitch the day off, though.
Huh.
Ha ha.
Yeah, not sure about that one. All I am sure is still fighting this bloody cold for months here now.
Seems like you're climbing out of that snow there, man. That snow's got you, man.
When you're in 2.5 feet of snow and it's November, everybody's sick. So we're sick of snow and we're just sick, period. So fun times, but no, I will be taking today or tomorrow off because
in my shirt, I just want to show my shirt. This is from the Turkey Trot.
Nice.
2014. What am I?
2014. Oh, you didn't just do it like today, like yesterday?
No turkey trot this year, man?
They do it on Thanksgiving Day.
Tomorrow.
Yeah.
Are you doing it tomorrow?
I'm never doing
your early morning workout.
I'm never doing it again.
How far is it?
I did the 5K. Yeah. One of my worst all-time athletic performances in my entire life. I tried. Did I tell the story where I trained for it and I didn't have new? Lisa's like, go buy new shoes. Don't train in those shoes. So I went out, ran like a mile and a half, and I couldn't walk for like 2 days. These shoes were like 5 years old. And then I tried to beat my niece, who's a lot younger than me. And so I went out, tried to keep up with her, completely fell apart. Ended up walking. I ended up overdressing because it was supposed to. I was like overheated. My daughters thought my face was going to explode once I finished. And my sister, who's 3 years older than me, I don't know how it happened. She beat me. So
everybody beat you, and you're an athlete.
I'm not a runner.
Tell the truth. You did a little shortcut. You cut through.
No, and I think I told this story too. I mean,
you would try to find that edge, man.
I would have cheated. If I would have known my sister was going to beat me,
I would have called an Uber.
But the thing, and I think I said this before, the worst thing too is like people watching the parade, and this is early in the morning, are like drinking and smoking pot, and you're running by them, and you're like,
that would have been me, Joel.
You're absolutely dying. But people don't want to hear about that. Let's go right to Deere, and let's talk about stocks that are up on the year because we get all down in the press. Yeah, Mitch, give us that Deere report.
Horning that Deere report. Let's get to it. You guys know I've been looking at these industrials. Let's talk about industrial.
Or
Deere
50.
Q4 EPS at $7.44, beating the $7.11 estimate. Sales at $15.54 billion, beat the $13.39 billion estimate. Deere sees full year 23 net income at $8 billion to $8.5 billion. It seems to me like, a lot of people have been complaining about stocks going down. And I understand that because a lot of tech stocks are down massively. But one thing that this can teach us is looking for relative strength.
Yeah.
This stock is up on the year, right?
That's
Well,
impressive.
sometimes you need to understand there's going to be rotation, right? And Dennis has been talking about it for, it seems like, 2 months now, about the rotation going into value.
Yeah.
It seems to me like they've definitely have found some value in Deere.
It's low PE stock. I mean, what's the PE on Deere, Mitch? It just fits the bill. What is the PE on that thing? It's like 12, isn't it?
Yeah, I mean, it's
wow.
Let's grab
and
it.
it also has kind of the fiscal policy kind of backing, right? There's a lot of money in the infrastructure bill, a lot of money that needs to get built up, right?
15.
Yeah, 15 is what I have as the forward outlook there. It doesn't seem bad to me. Industry average is around 13 also, just to kind of compare that.
Again, if we go into recession, a lot of people are going to buy new equipment here. So that's obviously what you got to think about. But right now, the market isn't worried about that. They're looking at low PE stocks. Those are the ones that continue to perform. You got a low PE. You got a PE in low teens. You got a PE in the single digits. You're hot. You got a PE at 50, 60, 70. You're not. It's simple Simon market, and that's what's working. Deere working here too, Joel. But I'm not buying any stocks at all-time highs. I'll tell you that much.
Go Mary in the turkey trot. Go Mary.
Yeah, go Mary. Take it out easy, Mary. That's what I have to say. Well, Dennis, I know you're not feeling well, but if you would have got up at 4 a.m. this morning.
It's at
Okay.
4:50.
No, it wasn't 4 a.m. No. It actually this happened in the 7 o'clock hour. It made a new all-time high. It traded to 449.74.
Wow.
Now, if Dennis would have been up, it wouldn't have traded over 444.76 because that was the all-time high from April. So, holy mackerel. I'm pretty comfortable in saying that no predictions, nothing guaranteed. But man, you're going to have to pick an intermediate level between now and 450 if you want to get out today on the, where to buy this thing on the dip. You guys are better than that. Pull up your 1 minute charts or whatever and try and buy it on the dip. But just an incredible move. Lack of liquidity. They take it up there. Bring it back down. So still up 1344. That's over 3%. And we're going to start this out. Deere ended last year at 376.40. That we had the dip under 300, but here's a stock higher for 2022.
There's just a ton of stocks higher for 2022. I mean, this list is not going to be a small list. This is going to be a bigger list than you think. Every energy stock is significantly on this list. Some of them have doubled. I mean, you got the tale of two markets really in 2022. It was sell all of the growth and the high PE stuff, which we've been talking about. And some of this lower PE stuff, they've been buying. I mean, we've talked about the drug stocks. Gilead up significantly on the year. Merck is sitting at I think Merck is approaching all-time highs. They're going back 20 years ago. 20 years, you got to go back to 2000 because it hit like 105 in like 2000.
Oh, it did?
So here we are 22 years later. We are finally getting, I can remember it back at 105. So I'm pretty sure you're actually now finally breaking out to new all-time highs in Merck. I don't know on your system, Mitch, if it goes back that far.
Yeah, what do you need to look into? Let's
go Merck.
I can go 20 years.
You go 20 years. 20 years isn't enough because it brings you past the tech bubble now. You don't see the run-up and previous to that.
You said 05. You said 05.
105, I think it was. No, 105. I'm saying the price was 105.
In what year?
2000.
Oh, yeah.
March of 2000. Right. That's when everything topped out, was March of 2000. So for those obviously who want the history lesson, March of 2000 was the top in everything. It was your equivalent to that, February 2021 when everything topped out here. So, and obviously today. So going back was March of 2000. That's when the prick started. And it wasn't just a collapse. It was the slow leak for 2 years. So you had some collapses. Don't kid yourself. But yeah, Mitch, if you can go back to March of
it.
2.
That's
Okay,
the
so I'm
top
wrong.
Yeah.
It was 9. It was only
Yeah, it is.
89 or 90.
Yeah, it
Okay.
only got up to, and it topped out, it
Okay.
seems like, in November of 2000. So the
November of
high
2000.
87.25.
And you know why that was? Because the tech bubble burst in March, and then they started rotating into value names. So they started to do the same type of thing that they're doing now. So, and then they just started hitting everything, obviously. The markets got ugly and hit everything. So, okay, so we are significantly back. I mean, it took 20 years for it to get back to 85, 90, and now you're breaking out. But, I mean, taking us back to the original conversation, there's a pile of stocks making new highs. There's a pile of stocks that, are up on the year. They're all similar featured, and that's low PEs.
Nope.
So, I mean, we're going to continue to talk about this trade because it continues to work. So I don't know when it changes. It might change. It's going to have pockets of change because, nothing goes straight down. Like, Carvana didn't go straight down from 300 to 6. It had a lot of little violent rallies in there too, 100 up to 150. And it's like, oh, it's back. It's a 50% rally right there. Yeah, the rally recently from 20 up to 58. That's a 250% rally it had there in the summer. There's been violent little rallies in Carvana, so it didn't just go straight from 300 to 6. But stocks that go from 300 to 6, even today, it's having a little violent rally, often continue their merry road to, single digits, not single digits to like pennies. So I don't know, going back, what other stocks? I mean, I know
Let's
banks,
do it. Let's try
drugs,
and find. Yeah.
You got stocks like Deere.
I
Do
don't
we
know
have any
about-
high PE stocks that are up on the year? That'd be an interesting question too.
You could look into some technology names, I'm sure.
Yeah, there was
ENPH,
solar.
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 Solar has held up
ENPH.
well. First Solar's lower PE. It was lower PE at one time.
Array Technology.
Can you show this list?
Yeah, I can, but it might confuse you
little
guys a little
small.
bit. There's a lot on this chart, so you would have to make it. I'm gonna try to make it as big as possible here for you guys. And so here's solar, and I work backwards a lot of the times. I'm going from technology into solar, and then
What platform
putting it
is
by
this
the
again,
year.
Mitch?
This is TC
TC
2000.
2000.
Yeah, it's pretty good.
Yeah, I like looking at this. Can show us all the kind of returns for all the way going back year to year until 2008. So that's why I like looking at this. First Solar, you can see in 2020 it was up about 76.77%. Year over date to right now it's 93%. So I mean, there are some stocks making still moves up. Enphase up 75, right? And look at the last 3 years. This has been an absolute monster stock to have. Remember when Enphase was down at like 50? It's $321 right now.
Short report. I remember that. There was a short report on it.
Yeah, there was a short report. We got to find who that short report was because I want to invite him onto my show. Have some fun with him.
It was. Oh man,
this is right through TC 2000. This isn't anything special. This is in their sector by year tab.
Okay.
So as soon as you open it up, you can look at the bottom, guys, and there's going to be sector by year tab. Yeah. And then only thing I did difference is I added the stocks here to the right hand side. They usually only have sector and industry on there, so I added the stocks.
Okay, so you have the solar stocks. We know had a pretty good year.
Yep. You can look at some other areas.
What else you got there?
Beverages.
Yeah, consumer staples have held up well because the defensive nature of
Let's
them.
look at the defensives, okay?
But if you look at XLP, it's like just there. It's kind of
I got you right here. So food distribution, confectioners, farming products, beverages have been up, tobacco, and then the ones that are like just slightly up are brewers and packaged food. Really, food distribution has been probably the best area year over year. This is not an area that we watch often, and I think that's another thing to kind of keep in mind. But you guys,
let's think about why, and it will jump out and bite you. Yeah. Why food distribution? Because you can pass that inflation
pricing power.
Exactly.
Pricing power. Yep.
Coke's so things like the Chef Warehouse, but a bigger name, SYY here.
They're totally passing those costs through. They're passing them right through.
Look at this move right now, SYY, right? This is not a bad stock to take a look at. You can put the chart up, Joel. We can take a look at that chart.
Yeah.
What do you guys think about that?
It's consolidating. It's been strong. I mean, I don't know when this rotation ends. It's been a hell of a run in a month. You know, it's hard to buy a food stock that's up basically 20% in the better part of a month, but it's consolidating and looks like it wants to go higher. The relative strength is in your favor, and they have pricing power. I mean, all these companies, all these restaurants, all these, they're distributing food. So people still got to eat no matter what. Recession, pricing power. Inflation, pricing power. Fed doesn't pivot, we still have pricing power. That's
One that I've
if
been
the Fed
looking at.
pivots, that's where these things probably these crowded
Just real
trades now come
quickly,
off.
pair of monthly highs in this one. This is called 87.35. Haven't hit that yet this month. August it hit 87.29. October 87.41. So if you're looking for another upside target, not really sure where to buy this one though.
What about the Hershey company, man? No one's talking about the Hershey's anymore.
Pricing power as well. The kids are still going to eat their chocolate. The kid isn't going to eat less chocolate just because all of a sudden, oh hey,
look at that
it's a little
monthly
bit tough
chart
out
though.
there.
Look how clean that is.
No Halloween candy for you. No, that's not the case. They probably hit the Halloween candy harder. But pricing power. Again, pricing power.
And then I'll go towards here, a stock that we could definitely thought about, ADM, Archer Daniel Midland. Really good chart now. It's really kind of pushing out, looking for the push towards 100 on that one. And now we're going to farming products that is up about 7.7%.
Yep. I have the all-time high in ADM, 98.88. That's within striking distance. We hit that in April. General Mills, same right there, new all-time high. Kellogg's has had a rocky, up and down year of restructuring, but that's showing a nice percentage gain on the year. Everyone is still drinking their Pepsi. Pepsi
12.3%.
Yep, Coca-Cola, a little bit slower of a mover, but how's that? That's having a decent year. Let's keep the parade going here. And we did.
Here's one that I don't think I would have thought about. Hostess brands, TWNK, Hostess. Now that's the stuff, right?
Florida. We've been talking about these stocks the whole year. This is not hindsight talk. We've been talking about these stocks for a lot longer than
not the
2
whole
months.
year, but for 2 months we've been talking about this trade. I mean, we've given the listeners this trade. So I don't know if it's like I can't just come in here now though. Like, and it is a good point he's making. Like, is now the time to come into all these stocks?
No,
I don't know. I don't know. I think the time was a couple of months ago. I'd wait for pullbacks on these, but these are the kind of stocks you want on your shopping list still.
But this is
because
when
I don't think we're just all of a sudden V-bottoming and all Carvana and it's going to be back at $30, $40, $50, $60 and all ARKK and Bitcoin's going to $1 million like Kathy said. I don't think that's happening tomorrow. So
we were getting a pullback opportunity when some of the growth names started getting a spike. Remember when we even got that GME day and it seemed like the dash for trash was going on? That was your opportunity. Yeah, that was your opportunity for value names. We had an opportunity. Yep. We had a pullback.
We did. You got to wait.
You wanted to get stuck in growth names? Well, that was up to you. You know what I mean? And
there's going to be another chance, though, on these names. There's always another chance in this market. You don't have to chase stuff. They always seem to give you another chance. So I think that's a good point you're making there, is that we just had a buying opportunity like 7 days ago in all of these stocks. Bristol Myers went from 81 down to 75, was back up at 79. These are the kind of stocks that have underneath demand because there's no bag holders. Just as much as you have the overhead supply and all the growth Kathy type names, the bag holders sell on any rallies. The people who want to be in these stocks buy on any dips. So you got to have this list ready. So what we're doing is really compiling a list of value stocks and stocks that are performing so that if we get a pullback in the overall market, and it might happen, and it probably will happen at some point in time, these are the kind of stocks you want to rotate into because I think this value trade could last for years. I don't think this is just a 1 month, 2 month phenomenon. As long as the Fed interest rates stay relatively high, value stocks are going to continue to be in favor.
Yeah, and as earnings contract, right, people will be even looking for more and more value, right? As they'll be looking for more cash flow, especially as everyone's been saying. And even Goldman Sachs yesterday said expecting 0 earnings growth in 2023 and a flat year for stocks. it's going to be a flat year for stocks. I think then I'll be looking for some defensive names, right? Some value names. Let's go towards the next earnings stock today. Let's go towards Nordstrom here. Q3 adjusted EPS at 20 cents, beat the 14-cent estimate. Sales at 3.5 billion, beating the 3.48 billion estimate. They see full year 23 adjusted EBITDA margins at 4.3 to 4.7%, but did say that they saw decelerated sales in late October and early November, especially in areas that have unseasonably warm weather. So keep watch on that. Nordstrom, seeming like they gave us a little bit of insight that they saw some struggling going into Q4.
These retailers, Joel, they're so unpredictable. I mean,
I know,
Burlington
it's
rally
tough.
yesterday on the bad earnings, and then you get Nordstrom, it's selling off. I mean, they're all over the place. Macy's blows it away, kind of, stock rally, rally, rally. Kohl's was wishy-washy, but then they turned around and bought the stock anyways. And then Nordstrom, it's down. One thing I will say is the Nordstrom PE is lower. I mean, where is the
I would
PE
too.
on? And this is basic CFA, level 1, basic stuff here. But it's not an expensive stock. So do they buy these stocks on pullbacks? They have been. Just like as much as they bought Kohl's on the pullback, do they come in and buy Nordstrom on this pullback? I think so. Do I want to jump in on the first down? No, but $20 seems like a logical level to me. So I would not be selling into the weakness here. I'd be more inclined to buy into the strength. Although I'm not sure Nordstrom's the one I want. There might be better candidates out there. But
Higher
$20,
end, yeah.
I think you got some support in here.
The pre-market, they didn't get it to 20 here. And pre-market trading looks like you have someone wants to bring stock in above 20 at 2030. I don't have any daily lows there. This 50% retracement is not exact, but if you feel like that this was the real good rally and you missed it, maybe it gives back half of this move. Maybe it's closer to 1975, 20. And lean on that area. I mean, it doesn't look like we're going to get under 19 today, but I think that's where the big boys stepped up last time was 1850 to 19. Coming back on the upside, could we fill the gap from yesterday? Why the heck not? Only need to reach 2182. That was yesterday's low in Nordstrom. I mean, look at this. You almost filled the gap too. I don't know if that was from last earnings or what, but you got real close to filling that gap at 23 yesterday.
Just because we're talking about like holiday trades, one area that I have been seeing making a run is Ulta. Ulta has been making a run there. So if you want to think about what type of stocks could make like a Santa Claus rally run, well, I definitely think Ulta could fall in that category. And look how it's been moving since early November. Not a bad looking stock. Monthly charts looking like they want to keep pushing. We'll see what happens there.
And retailers historically stronger Friday too. Obviously Black Friday. We know this is a strong day for retailers. You do see strength sometimes into Black Friday in retailers. I'd be very skeptical of shorting any retailers right now ahead of Black Friday because they typically do run up into it. Maybe we're already seeing that to a certain extent. I mean, Macy's, heck of a day yesterday. Obviously, they just reported, but Kohl's, reporting and a couple days earlier and moving up here. So just be careful of shorting any retail names into Black Friday.
All right, let's go to the next stock here. Let's go to HP as they're cutting out that they're doing some job cuts. Definitely talked about today, laying off between 4,000 to 6,000 employees over the next 3 years as demand for personal computers weakens. Q4 EPS at 85 cents, down from 94 cents year over year. Sales at 14.8, down from 16.68 billion year over year. And doesn't look good right now. I think in the long run, at least for personal computer demand, we'll just have to wait and see if that turns around.
One thing to consider though, HPQ and Dell both have lower PEs. So we did see Dell come out with not that great of numbers. They turned around and bought it. So HPQ, there was down last night. Now they're doing the cost cutting measures. That's what they like. We saw that with Meta. That's kickstarted a 3-day rally here. I wouldn't be surprised with HPQ, even though it was a softer quarter, because they're announcing those cost cutting measures. And I don't think it's coincidental too. When the headline numbers hit, they hit the stock. Because I was trading last night. When they announced the cost cutting, which came a couple minutes later, the stock turned around. Yeah. they immediately started buying once they dug in, and then CNBC was mentioning the head count, and cutting costs obviously, and cutting same thing that Meta just did. So I think the market is liking that right now. It's the market that we're in right now. They want to see cost come down because revenues aren't going up as much. I know it's indicative of a recession, but they don't care. They just want to see cutting costs. They want to see people losing their jobs. That's what the market is cheering for right now. It's sad but true. So I do think HPQ could pull a Dow here. So just be careful fading this.
Definitely be careful there with the HPQ. Any
Yeah,
levels to watch, Joel?
Yeah, I mean, 3027 was a recent high. Now you did take that out in the pre-market, so I'd keep an eye on that. If you're looking for big follow through, even if you get through that 3027, you might run into some paper at 3050. The other thing too, and Paul is mentioning this, and I remember when he bought it, when Warren bought this thing up here. He did. It was a battle between Warren and like Morgan Stanley, and Warren bought this one high. He bought this up in the 40s, or not the 40s, but like there's 38 to, I mean, even lower. I mean, I'd say 35 to 40 zones. So who knows if he's going to come back in and buy more on it. But this is one where I can remember he was a little bit early. On the downside, or just looking at this thing for the trade for today, I think I'd be more inclined, instead of trying to pick it up of it, if it came back into this 2950 area, you had 4 highs in that area. I'd rather try and buy it on a little pullback at 2950 for HPQ.
All right. Well, team, I got something for you guys. Let's go ahead. Let's get into getting ready for these calendar releases. We're going to take a look here. There's a lot that's going to be coming out here. So I'm actually pulling up the Benzinga Pro here to take a look at some of these estimates and kind of talk about what's coming through here. A lot's going to be hitting at 8:30. You guys can also follow along with this calendar. If you guys don't have access to a great calendar, well, check out Benzinga Pro today. We have a great special for you guys. Going to go ahead and throw up the link here in the chat. You guys can check it out. We got 45% off the monthlies and 60% off the yearly price. So check that out and see how Benzinga Pro can help you make smarter trading decisions. Let's go towards the economic calendar here. You guys are seeing new home sales, right, is an important one to take a look at today. That's going to be at 10 a.m. I saw earlier today at the 7 a.m. Mortgages released. That didn't look too bad there in the housing markets. But we got a lot coming out right now at 8:30. We got core durable goods. Going to be very important. Initial jobless claims. Our expected estimate at 225,000, prior at 222,000. So initial jobless claims expected to bump up a little bit. Let's see if we can actually get that even higher than 225,000. That would be a good thing, I feel, for the markets. Of course, a hot initial jobless claims would show that jobless claims are rising. And of course, that could help with the outlook with the Fed interest rates and slowing down the interest rate speed. There's still a lot more on the tape too. At 9:45, there's PMI, right? Wow. There's so much. And then 8:30, there's even more numbers that we can go through. Continuous jobless claims. There's going to be a lot to give here, so I'm not going to be able to give every single number here, but I do want to give you guys the insight. And if you guys want to follow along with all this, of course, just click the link, sign up for Benzinga Pro, and you guys can watch all this as it hits the tape.
All right. We've been leaking a little bit into the number. We hit 2175. Really nothing relevant up there for you. We are down a stick here at 09.25. Pre-market low 4006. I think if we take out the pre-market low, that 4,000 psychological, not much there. I think I'd be a little bit looking for a little bit deeper of a dip if they do decide to hit it. Maybe 39.90 if trying to buy the dip, and just the way we reacted, the way we sold off a little bit. Maybe they're going to protect that pre-market high today at 4021.75. You can see what's going on here on the 1 minute chart, and we're coming up momentarily. Mitch, I'll just well, here we go.
Yeah, there's a lot going to be coming through here. So
okay. All right. The algo jumpers are out there. It's a battle at 10.25. That's been the closing high for the move. So that's something that we want to keep. Really would like to keep a sustained bid above that going into the regular session to see if we can get up and test the high of the move. The high of the move was
Initial
made.
jobless claims coming in at 240,000 versus 225,000 over that. That's a good news for the markets. I think that could push us up a little bit. Durable goods coming in at 0.5% versus the 0.1% there. Continuous jobless claims at 1,551. That's 1.551 million. And versus 1.517 million. So doesn't seem too bad there on the continuous jobless claims and the initial jobless claims. Looking good, at least for that upside outlook. We'll just have to wait and see how the markets are reacting. What are we seeing on the tape, Joel?
I'm
still here because we really didn't move. Welcome to holiday trade.
Hey, we're almost back and unchanged. We got a little pop.
I like this number.
Yeah. I mean, we've had a big round. I mean, it's a good it's a good number because it's a bad number. But still, it feels tight. You hit 40.13 there, so you didn't come anywhere near the pre-market high and nowhere near the pre-market low. So the big numbers are, the CPI and the PPI for now. I guess that's going to be our focus. But not a little bit of movement, still positive on the session. Nothing there, Dennis. The stocks they
She's
moved.
Quiet. No, they didn't move.
No. Okay.
There's not much movement here. I mean, this is holiday trade, and holiday trade can go two ways. I've traded, like 22 Thanksgivings here now, or 23 professionally. Sometimes it's nothing burgers, and sometimes the liquidity is so low that you can see pockets of significant movement. Usually, the overall market doesn't do that much, but you do sometimes see pockets where just because there's a lot of less participants out there, less institutional action, that stocks can actually move a little bit more if there's a buyer or a seller. We are starting weaker right now, though. So that's interesting too. So just as I say, there's nothing going on. This I start the conversation, nothing going on. We sell off 5 points or 4 points,
and then we're right back. It's a battle. It's a battle unchanged here at 10.25. So, Mitch, do we have any any more earnings stocks or analyst stocks to cover? If not,
I'm getting lost in the German sauce. I hope the Germany wins today. Watching a little bit of World Cup action.
Why do you like Germany? Why do you?
You see, most people don't know, but I actually have dual citizenship and I have German citizenship. My grandfather was German, and so there you guys see it. You guys know something that you guys might not know. I got German descent. I got German citizenship. Can always sneak out of here and go to Germany.
There you go.
If I need to.
Okay.
Deutschland.
U.S. tied, right? U.S. tied.
U.S.
right?
is struggling, man. They're struggling. Germany, let's go.
How's Canada doing?
Do we even have a team?
They're still on the ice.
We're still on the ice. We do good in the hockey sometimes.
One stock that the chat's bringing up there that someone wanted to ask about was Lucid. Guess what? I'm almost to that $10, Dennis. Almost there.
Where is that thing? I know I had the price target of 5. So when I was 30, I said it was going to 5. So we're not quite to my price target, but we're getting to Mitch's price target. So
we're almost there. Almost there.
Do you guys want a real quick World Cup story?
Yeah. Tell us what's up, Joel. What do you got?
Okay, so I believe it was 92, and I was working at Oldie Discount, and they sent me out to San Francisco because they had a post there, and they needed someone to work at the P-Coast at the Pacific Coast Exchange, and I was a logical choice, so I went out there. Dana was about not very old. She's probably like 4 or 5 months old. So Lisa and I took Dana. We go out to San Francisco, and that's where the World Cup is. Okay. And Brazil won it. Okay. Guess who was staying in our hotel? The Brazilian soccer team. Okay.
Really?
You didn't give me some autographs, Joel? You don't got me some.
Man.
Come on, man.
So Dana was a baby, like a super baby. And she would get up in the middle of the night, and Lisa would have to take her out on the streets of San Francisco. And she woke up the night they won the World Cup. And I think it took her, we were up on a way up high floor. And she had the stroller. She had to wait for that, the elevator. And then she had to take her through the lobby. And it was absolutely, absolutely crazy. And I don't know. The OJ thing was after that, wasn't it? That was a different year, right? The OJ thing wasn't 92. I think that was a little bit
Joel,
later.
I was 1 year old, so I don't think I'm gonna remember.
Okay, but anyways, that's my World Cup story. Do we have our guest lurking in the background yet?
Yes. Joel and I determined that we did not want to be a part of this battle, so we said, you know what? We got some guys that can battle here.
It's not a
Find
battle.
me in a battle. I didn't want to.
It's not a battle, Mitch.
Just joking. You see, getting you guys excited a little bit.
Telephone, telegraph, tell Mitch. Come on, it's not a battle. Okay.
All right, let's get our guy on here, Sean Udall. We always love his outlooks. Let's take a look at what he's taking a look at today. Let's bring him on here. And, of course, got the boys now. Let's talk about this. What are we looking at today?
What's
Sean,
up, Sean?
can you hear us?
I can. Can you hear me fine?
Yeah, we
going
can
on?
hear you. We can see how you doing over there.
Well, I can't wait for this year to end.
Okay, so we're gonna do a little different segment here.
Well,
okay?
I could say I can't wait until March probably, but let's start with first things first. I can't wait for this year to end.
So I got 4 questions here, okay, and I'm going to start with you.
By the way, I do want to know what the battle was about because all I heard was OJ, and I believe OJ was 94, which I believe was the last time the Fed raised interest rates a lot. But unlike this time, that last Fed actually kind of knew what
Sean,
they were doing.
You're getting ahead of yourself. Okay, Sean, I'm going to give you 1 minute.
I thought
here.
Dennis might like that.
I wish I could brought my phone down here so I could time. Oh, I did bring my phone. Okay, Sean, I'm going to go to you first.
Yeah.
This 3,500 in the S&P is a long-term low, and we are set up for an eventual rally to new all-time highs.
Or what is this? True or false?
No. Just his comments for a minute, and then you get to comment.
God, that's a tough one. I mean, I called the May-June low very well.
Yeah.
I did think it would actually hold better. Some of the indices actually did go to lower lows than the May-June low. Honestly, I don't know. Here, I gotta see. I'm gonna hedge, and I'm gonna say, if we finally see a turn in the average stock, then the S&P low is locked and loaded and won't even be threatened. If we still continue to see deterioration in the average stock, then I'm going to say what I said mid-year, which was 100% right, when the S&P was only down, I think, 15% at the time. And I said the S&P makes 0 cents here versus the average stock. Either the average stock is going to have a massive rally, or the S&P is going to go down to about minus 20 to minus 25%. And that's exactly what happened. So I'm going to say the same thing right now. Either you see lots, like literally armies of stocks go up 20 to 50% or more, given the S&P is at 4,000, or the S&P is going to break the prior lows.
Dennis?
Holy cow, that's a tough question. Do I think this low is going to be a multi-year low, this October low?
Yes.
That's a tough one, Sean. I'm the same way. I could see if we start to get a turnaround, if the Fed pivots, I could see how if we continue to get inflation data that comes in light, I could see that scenario playing out. But I could also see the scenario playing out where just imagine that the next inflation data is a little bit hot. They'd be like, oh my gosh, it was a one-off, and they'll hammer stocks. I mean, we're so dependent on the Fed here that it's very hard to make that call. Do I wish I owned stocks from that 355 to 360 SPY? Absolutely. Would I be buying certain stocks on pullbacks, value names? Absolutely. Do I think that the low from October is a multi-year low that's going to hold for the foreseeable future? I'm sitting on the fence on that one, and I'm just going to say, I don't know.
All right, Sean, I'm going to go back to you, and this kind of goes along with it. But just from our conversation, I mean, you think that the Fed is totally out of control here. They have no model for the way they've taken interest rates up, and because of their reckless abandon here, they better do we've whipped inflation isn't even a problem here, and the Fed better pivot and pivot extremely soon.
Well, that's probably, I mean, the Fed should have probably stopped at 350. I mean, that's just that, like, but they were going to overshoot. The Fed always overdoes it a little bit. You know, historical Feds, which were better, still overshot, right? They always do this thing they're doing for too long, you know. And again, it's not so much that the Fed raised rates way too much, which they have. They should have raised rate. You know, we should have already been at 1% probably by the end of Q1 2021, maybe even 1% by the end of Q4 2020. So, but you know, you can go back. We can hindsight the Fed here. Dennis, in the last time I was on, I'm not sure Joel was on. I think Dennis was on.
Yeah.
Basically, I don't know if I used this term then, but for whatever reason, the Fed is God, and the nobody, even David Tepper. Even like the who's who, the new crop of Warren Buffett's, whoever they are, I guess David Tepper is probably the closest. They're afraid to buy stocks. Like I've never seen managers running tens of billions of dollars literally be afraid to buy stocks until the Fed just anoints, okay, I will allow all of you to make money in stocks again. I mean, I literally have never seen a trade like this. This is a black swan market. So Dennis is right. It's like because even so, the Fed. Let me just say this. So they put the time in. The whole Fed, everybody inputs their stuff into what's called the official Fed release, right? So the official Fed release before Powell speaks was very clear, and it was very balanced. And it was like, we've done a lot. There's, you know, you basically can put a framework around it and say they're starting to get some religion, and they know they probably have overdone it, but they don't want to admit it. And then the Powell comes out, and some guy says, "Oh, hey, look at stocks are up and bond," and he was actually wrong. His like quotes were delayed 20 minutes, but Powell had this huge negative reaction when he found out stocks were up, right? And hey, you get a hard 3-day rally, and Fed governors come out and basically attack the stock market, and then they come out and they say, "Oh, well, we're not targeting the stock market." I mean, they obviously are. So, I mean, this is just a really, really weird, disturbing thing that the Fed
All right,
is
Dennis.
last comment. And oh, by the way, as of last November, the Fed can't own stocks anymore. Like, I can't believe that doesn't get in the news. So it's like, what? Do they just want to jam rates up high enough since they can't own stocks? They got to get good yields on their rates. I mean, this is looking pretty bad.
Okay.
Re-ask the question, Joel.
The Fed is out of control. They have no model here for what they're doing, and they're going to eventually, unless they pivot really soon, inflation's dead, and they're going to push this company into a deep, deep recession.
I think the Fed has done enough that if they just stayed and held interest rates up where they are for the foreseeable future, it will eventually push us into recession, because we know, we've looked at the track of where the money has gone. You know, obviously people had a lot of savings. They're starting to use those up. We know credit card debt has soared in the last few months, and we just haven't had enough time for the Fed's plan to really work. So I think the Fed has gone far enough that as long as they just keep interest rates where they are, eventually prices will start to come in. But the Fed's not going to do that. They're going to continue to go till we see that. So I'm kind of in the camp that, yeah, maybe they are going too far, and they probably should just sit back now and let their plan work. Patience, probably a virtue here for the Fed. I don't think they do that, though. I think they're going to keep their foot on the pedal until they actually see. We know the data lags significantly. So we've talked about that with Blue, obviously. So it's going to take time for us to actually see the Fed's plan working. But it's just common sense. If you keep interest rates elevated for long enough, eventually people are going to have less cash, and eventually people are going to spend less. And that's going to eventually bring prices down.
I'm going to go back to you on this one. In view of the recent rotation here from growth to value, it's here to stay. and value stocks. We had a 10-year period where growth outperformed and your high flying tech stocks, and now there's a shift to value stocks. I'm sure this is going to get tied into the Fed as well too. But is this just maybe 2, 3, 6 month, 1 year phenomena here, or are you looking for a multi-year cycle here with value stocks over growth stocks? Dennis, that one was to you. And I froze.
Did we lose Dennis?
We did.
I think we might have lost Dennis there. All right.
Well, here I can answer
question
that,
goes
and
to Sean.
hopefully he comes back. So
Definitely.
here's Joel. I actually think you're right, but I don't think it's gonna. So in other words, what is actually value now? Like is a stock that's trading at 2 times net cash or 2.5 times net cash and 2 times forward sales, when normalized valuation is like 7 to 10 times sales. So something that's trading at a 50 to a 70% discount to normalized ratios. I mean, again, I'm not talking about expensive ratios. So I would say value stocks are probably going to lead. Like Meta's like a deep value stock now. Twilio is like a deep value stock now. Not every software company is, but I mean, I'd say 50, 60, 70% of the companies with 30 to 40% growth are probably much more value stocks than quote unquote traditional values now. So I think your question you're probably looking for is commodities. Do we have a multi-year commodity cycle, right? Which we did see in the 90s. But if you're just talking, hey, value over growth, I do think it's value over growth, because I think people that bought high growth, got burned, and they're going to remember the pain of that for quite a while.
Yeah, Dennis,
so even if
cut
they're
out,
buying tech,
cut out for a second there.
even if they're buying tech, I think people are going to kind of look at GARPy tech, value tech, stuff like that. And I think that will favor over time.
Yeah, people really got burned, obviously, in 2001, 2002 after the tech bubble burst, and value outperformed for a number of years after that. So I do think the value trade will stay on for a while. The only way that changes is if the Fed fully pivots and then starts cutting rates. Then they will go full growth. So follow the Fed, and I think what you want to buy. If the Fed is still going to be somewhat hawkish, somewhat, tightening, somewhat, still keeping rates high, not necessarily just a pivot, but they need to start lowering rates for growth to start catching a bid again, a significant long-term bid.
Okay, Sean, this one's to you. Really, there's nothing wrong with the markets except we don't have the uptick rule. It's not the Fed, it's not earnings and everything, but really it's stock rates on lower volume stocks, and the biggest problem with the market right now is that we don't have the uptick rule.
Well, I think the uptick rule is the biggest problem with market structure. So I think it's the single biggest factor this year. But no, to paint that as a brush, I mean the Fed is obviously 90% of the reason stocks are down. But is it 90% of I mean, you could just look at the historical periods of time, even crashes. Like the behavior of this crash is much different than many other crashes. But I think, and this again, we've all talked about this. We talked about liquidity. So the only thing that goes up is stocks that have liquidity. So the first paradigm was, companies with profits aren't down. Well, that was true for about 6 weeks. The companies with profits held on to valuations better, but they were also the companies that had the largest market cap. So then the next phase was, it's only expensive stocks going down and blah, blah. But really, if you dissect this market crash and you basically rank stuff by market cap, and it doesn't have a lot to do with profitability and other things like that. Again, you can find correlations, but the single biggest factor is the lower the market cap, the larger the decline. So it's basically a liquidity raid. So at this point now, the market was crashing when the Fed had only raised rates 75 basis points, by the way. So anytime the Fed takes, without the uptick rule, anytime the Fed takes liquidity, and we saw the same thing in 14 and 16, et cetera. Late 2018 was a great example. So anytime the Fed takes any liquidity away, stocks just drop precipitously, and there's really no rhyme or reason. Nothing really matters until the Fed's done. So then when the Fed either accommodates or quits or pivots or whatever, then all of a sudden the liquidity god is anointed again. And all of a sudden stocks have liquidity, and then everything goes up simultaneously. So in other words, stocks don't really trade the way they probably should trade. In other words, a really good, healthy market, you know what it is when stocks rise, but they rise slower than their growth. So like all the years I made all the money in Apple and Google and things like that, those stocks rose nicely, but they actually rose a lot less than the company. They rose much slower than the growth rates. And then sometimes you get a catch-up trade and things. But anyway, no, the uptick rule is the thing, was the secret sauce that regulated liquidity. And I'll end it by this and say, like, look, you get a really beaten up stock and everybody hates it, but let's say it's selling at 1.5 times cash or something. In the old days, when we had an uptick rule, that stock would hold. Like if you wanted to just park a bunch of money in a $4 stock that had $3 a share in cash, that stock would not keep going down. If in this market, if a stock like that is with the algos, that stock might trade to where it's only 0.5 times cash or something like that. So anything where they can suck liquidity out and drive prices lower and force bids lower, that's where you need an uptick rule. And again, there is an uptick rule, but the uptick rule we have now is almost worse than not having one, because it's a gainable.
All right, let's
rule.
Let's let Dennis. Dennis has studied market structure for years. You guys probably don't know that, but the CFA, and have a lot of thoughts on market structure. Dennis,
I mean, me and Sean have had arguments. Me and Sean get along, and we get along on a lot of stuff. This is one topic, and I think you intentionally threw that in there. We're obviously on the opposite coin. That and Sean knows. Sean already knows. I've been, and I think getting rid of the uptick rule was one of the best things that they did for market structure, because it makes everything trade smoother. What the uptick rule does is it slows down price discovery. The problem is, in 2010, they brought back the alternative uptick rule. And it's way worse than the first one, because you can't even hit a bid if it's an uptick. You can't hit a bid at all. So you can only short on the ask in the alternative uptick rule. The alternative uptick rule comes in when a stock falls 10%. If it falls 10%, on the day, the alternative uptick rule comes into place for the remainder of that day and the next day. So you'll see instances where stocks have news come out and they don't trade down right away, because there's nobody that can hit the bid except a natural short or a natural long. So shorts, the algos can't come in and price it to where it needs to be. I've seen stocks trade up in the after hours, sometimes for 20 minutes, 30 minutes, and there's poor retail traders buying the offer, and the offer is just loaded. There's just so many sellers because they all want to get shorted. And you see a tick. It's just literally siphoning money away from retail traders, because the price should have been down here immediately. So what the uptick rule does is just slows down price discovery. So nothing to do with liquidity. It's all short-term market mechanics, but it slows down price discovery. I absolutely think the uptick rule is stupid.
Okay, so let me just interject a couple things. So sometimes slowing things down is actually really good. So because you can't really crash a stock up, but you can crash a stock down, right? But let's just go with this. So and hey, maybe a problem, like I've looked at this stuff for years too. Maybe the problem is this alternative. So in other words, I can't judge the difference between now and having an uptick rule versus, in other words, we have this alternative uptick rule. So if that was not in existence, maybe stuff would trade better. But I don't think Dennis would argue with the fact that, we had 77 years where you had an uptick rule, and markets just seemed to function a lot better. And that doesn't mean they went up more. We still had crashes. We still had economic cycles. It just seems like every time the Fed takes any liquidity away, we basically have a stock crash. In other words, is price discovery good if it's false price discovery?
And I'll say the one thing about stocks going on the downside, I think they're just as reckless on the upside.
They're way. Look what happened in 2020.
Yeah,
2021.
That
Great point.
Yeah.
Till rate.
But it got unwound. it got unwound very fast.
But
and
do you know
very
what
naturally.
caused Tilray to go from 50 to 300 in basically a day? It was the lack of shorts. It was the lack of people. There was nobody willing. One, maybe couldn't get the borrow. But two, the natural market makers are saying, I'm not shorting that. I'm not touching that. And they just let it go. And there's like no offers. So then you have poor retail just, buying at the market. And, not that it's all retail traders, but there is some dumb money in retail.
Yeah,
Just buying up. And some dumb algos too, just buying up.
But I'm glad you brought that up, because interestingly enough, when we had an uptick roll, seemed to be we didn't have nearly as many of these weird Tilray spikes. We didn't. I don't remember stocks doing that years ago. I don't remember nearly as many Tilrays and GMEs and meme stock runs when we had an uptick roll. I don't. I'm having a hard time remembering those kind of crazy things.
Well,
but now we don't have an uptick rule.
It was exact same as 2000, where we did have the uptick rule, and you saw crazy moves back in 2000. Joel can remember those. I mean, trading in 2000 was very much like 2020. It was similar, and obviously Tilray had its move in 2018, but we know there was a lot of crazy moves in 2020. Very similar to the year 2000, where there was an uptick rule. There was stocks going up 200, 300, 500% sometimes in a day.
Well, let's do this. So if you disagree with the uptick rule, I think you do agree liquidity is incredibly poor in lots of stocks, especially lower market cap stocks.
For sure.
So what should be done to correct liquidity? In other words, instead of arguing about a rule, so what should be done?
This is an awesome conversation, and I don't think the off-exchange market makers like where I'm going, but I mean, you've got to start allowing the liquidity. So what's happened in small caps is it's dominated by off-exchange market makers. It's dominated by the Citadels and the Virtues. They've basically just come in because you can offer, and you know this, Sean, in the small caps. You bid for a stock, it comes down, tries to trade at your price. You don't get filled because the off-exchange market
on a limit
maker
order
has the chance to just step in between your order. You got some retail trader from TD Ameritrade trying to sell to you. Well, you don't get filled because they have that option to come and say, I'll buy it at that. So you have these juicy spreads, and they just sit there and trade between the spread all day, and you can't really get filled. So the institutional trader says, screw it, I'm not going to trade any of this stuff because I can't get filled. And if I do, my slippage is just enormous. So, so they just lay off all those stocks. So you've got to limit internalization. You've got to limit off-exchange market making, and you will fix some of the problems in small caps. And that's what needs to be done to fix it. So it's not the uptick rule. It's actually the fact that we allow market participants to pay for order flow, to be able to transact directly against that order flow, and then match the bid or the offer without posting any bid or offer of their own. It's ridiculous. It's the biggest scam in the market that's happening. Price improvement is the biggest scam that this market has maybe ever seen. It's completely bogus. Dave Lauer is completely correct. Completely correct. But there's so much money that goes into keeping the status quo. I've met the SEC 4 times. We wrote 2 papers on this, through the CFA Institute, showing this kind of stuff. So you're absolutely correct, Sean. The small caps are a mess, and it's because of off-exchange market making.
Okay, so one, I would think getting rid of this crappy uptick rule would also be good. So that would be a recommendation I would have. So the last thing is, why are market makers allowed to do unlimited naked shorting when nobody else can naked short stocks? And there's all sorts of violations about naked shorting limits. But if you're an algo market maker, you can naked short unlimited amounts of stocks. So that's another thing you couldn't do if you had an uptick rule. So the reason I advocate an uptick rule is because other things people get away with.
But they would have an
exemption
from that anyways.
Well, but I'm just saying, why allow any naked shorting
from everything too?
Why allow any naked shorting? Period. That would seem like.
With you. I'm with you on the naked shorting. I don't think the market makers should have that. The reason they have that is because they need a seller. If there's no seller, they need to allow somebody to sell the stocks. The market maker come in and short it because they don't want the Tilray to have where there's absolutely nobody willing to sell or nobody able to sell because they can't find a borrow. But I don't think, I think it does, probably get abused to a certain extent in the market making world. I still think it's off exchange trading that's probably more of the culprit for the last.
All right, we gotta end this discussion here, Sean. Thanks
That's
a
great.
lot. It was good.
It was fun. It's always fun,
I really,
Sean.
Yeah, yeah. No, I know, everyone, we got a lot of people in the chat that are welcome getting educated here. And then, there's other people that are not. So you don't have to listen.
Anyway, guys, thanks for having me.
Yeah, Sean, thanks
Thanks,
a lot.
Sean.
We'll check in with you, eat a lot of turkey, and we'll get some stock picks from you
All right, see you,
sometime in
Mitch.
December. Money
Whoop,
Mitch,
whoop.
wake up, Money Mitch, and we're going to get you. I'm just going to wrap things up here on this Wednesday, Synthetic Thursday. We're down a couple and a half handles here at 4,007.75. I don't know. I'm looking like a less than average range day. Rather see it a little bit under 4,000 if I'm buying the dip, and that pre-market high is being protected for now. So everybody, have a great Thanksgiving, and we'll be back with you. We'll do at the close today, and then back with you with our regularly scheduled program on Friday morning. Thanks a lot, and talk to you guys later on.
Man, I don't even need to say anything. Joel took care of it all. Joel's out. You see how quickly
Joel does it all today. We're good. We're
He's
out. We
out.
can go
I
eat
don't-
turkey.
I don't need to say much. I mean,
Go
he
eat
said it all
turkey.
for me right there. Definitely, Joel killed it there. Glad to have Joel's internet working. So shout out
That's
to
nice.
Comcast there. Looks
Yeah.
like Rogers might have interrupted Dennis.
I think
for a
Rogers
second.
dead in the middle. I've been saying how Rogers is doing pretty good, and then all of a sudden, bloop bloop. It's like,
Bloop, bloop.
lost internet connection. I was like, here we go, Rogers. Thank you.
All right. Well, definitely happy Thanksgiving to everybody out there. One of the things that I think we really try to do is, what do we say on Thanksgiving, right? We give gratitude, right? Thanks for all the things that we've done. So want to give a shout out. Thanks. Joel isn't here. He already dipped. I wanted to thank him, but thank Joel and Dennis for everything that they do for us here on Pre-Market Prep, and also teaching myself, right? I learn from these guys every single day. There's a reason why I'm here on Pre-Market Prep, because I was just like you guys in the chat, catching this every single morning, going through my routine, getting ready for the stock market. What am I looking at? Are they seeing similar things? That's what I'd be trying to look for. And like always, we can't make financial decisions for you guys, but definitely we try our best to bring education and progress, and how you guys can have a good process towards the market so that you guys can go ahead and keep building up your skills. So thank you, Dennis, for everything that you do.
And thanks, Money Mitch. You're doing a great job hosting. Obviously, we had a big loss with Spencer Israel, but Mitch has come in and rocked it, and he keeps getting better and better, and he's rocking these shows. So we thank you so much, Mitch, for jumping in and keeping this show going. And obviously, the research you do, helping with the chat. I mean, you don't know behind the scenes. Mitch is running the show. He's trying to watch the chat to make sure, obviously, everything's cool in the chat. He's, managing the news. He's managing so much going on. So thanks, Money Mitch, for all that. And thank you, chat, because like I said, I don't just learn from Money Mitch. I don't just learn from Joel. I learn from the chat as well. You guys are great. You give us trading ideas. People ask, why do I do the show? It's not for the money. It's for the environment. I'm part of a community.
Oh, yeah.
They have great ideas. We have fantastic traders in this chat, and I learn from them as well. We're always learning. You never know it all. We're always learning from everyone. So thank you, chat, and thanks to obviously everyone else as well.
Thank you, Dennis. You have a great one. Enjoy your day and enjoy your long weekend. We'll see you on Friday at least. We'll get a little piece of you. So we'll see what happens. Enjoy that turkey.
You too.
Careful
Thanks,
out
Money
there.
Mitch.
All right, let's go ahead. We'll be wrapping up right here on Pre-Market Prep. And like I said earlier, guys, check out our Black Friday sale. We're having a great sale right now for Benzinga Pro. You guys can get up to 45% off the monthly price and 60% off the yearly price. So definitely check that out. Of course, you guys can't go wrong when you're using Benzinga Pro.
Introducing portfolio synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure protected connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
Definitely, team. Check it out. Hit that link. Get your discount, of course, of Benzinga Pro. And now to get you over to some live trading action, we'll let you know we won't be having Benzinga Live and stock market movers today. We will be doing some live trading action. Of course, we can't let down that team at all. We're going to be ready to go ahead and get after it. Lord Ryan, Zunaid, and I ready to get towards that. And then at the end of the day, we still got At the Close. Catch us with Joel Elconin as we go through the overall market, what's going on out there. And a last little bit, go Dutchland, Germany. We'll see what happens in the World Cup. Can the U.S. bounce back on Friday? We'll see if they're able to bounce back, and definitely keep a watch on what's going on in the World Cup, the markets, and of course, everything else. Fed minutes released today, 2 p.m. Don't miss that. Definitely going to maybe get some fireworks later in the day. We'll see what happens in this market. Hit the thumbs up on your way out.